With official acknowledgement of recession drawing closer, central banks around the world have been rather quiet. No mention of reducing interest rates quite yet. No mention of QE4. And no further stimulus at this time. Canada, the UK, Australia, and other developed nations are sitting idle as they wait for America to make the decisions so that they can follow behind. It is always most political to wait for others to complete a hard task, and then it becomes more comfortable for the rest. Oil is crashing, stocks are crashing, and right now we see growth in China hitting a 25-year low. You came here for the truth, so let me unveil that for you. Today we're going to get into China. I want to touch on some other points as well. Let's get into this right away. Article out of CNBC. China's economic growth rate slowed to a 25-year low to 6.9% as the world's second largest economy continues to shift away from its manufacturing roots. 2 points that I want to make. Many will say that 6.9%, let's call it 7%, is an amazing growth rate by global standards. What I would say is that we need to focus on what's important, and that is a 25-year low. So the growth is slowing down significantly. 25 years is a long time. Now, their other point is that they're shifting away from their manufacturing roots. Yes, the service industry has definitely picked up. More jobs are in the service industry. Many more people are moving to the big cities away from the rural areas. I do acknowledge this, absolutely. However, the shift in your focus away from the manufacturing is their intention, because we have seen these numbers declining and they want to shift your focus away, not that they're shifting at all. That is not the case at all as far as I'm concerned. I've seen the statistics. I've shown you them here. The growth figures, still respectable by global standards, were in line with estimates for quarterly growth of 6.8% on year, blah, blah, blah. It goes on. This is all about expectations. If they would have come out and said, we expect growth to be 2% and it went 6.8%, then the stocks would be flying high. But because it's 6.8 and it's around there, well, everything's expected, let's just leave it at status quo. All these expectations don't make an ounce of sense to me. Who cares about what the economists expect and what happens? Just worry about the real economy. Don't worry about these economists' expectations and then the stocks are somehow affected by it. This has never made an ounce of sense to me whatsoever. Let's look at this article out of Reuters, Market Meltdown. So the former chairman of the Bank of China said the stock market rout highlighted the problems facing the regulatory mechanisms. This is his words. The abnormal stock market volatility has revealed an immature market, inexperienced investors, an imperfect trading system, and inappropriate supervision mechanisms. This is some serious words coming out of China. And in most cases here, let's agree that this is what we are seeing. And it's not just in China, but we're seeing that all over the globe. Let's move into this just quick chart here that I wanted to show you. Real estate as a percentage of household wealth. We always tend to overlook how other countries are, whether it's, you're in the United States or you're in Canada or wherever. You need to remember that situations are different for everyone, different economies, different people, different everything. And this is one example of that. China's household wealth is clearly held in real estate, 74.7%. A lot of them purchased their homes with cash. Things are different in many of the developed nations. And I would have to say that Canadians, on the other hand, are more in line with China. I'd like to see actually the statistics on this, because individuals here can barely afford their home. So they're actually cash strapped and the money is all kept within their real estate and the debt they hold on it. This is a diagram from my book. I've shown it before, but basically the situation that they are encountering right now in China and other countries, but let's highlight China for the moment, and instead of the Fed, think of this as the People's Bank of China. Now, what we need to understand is that they are purchasing bad debt, they're purchasing stocks, they're purchasing everything they can get their hands on. And what is that central bank left with is a pile of IOUs, a pile of paper, whatever it is. It's no good to the government in most cases. They want to get rid of it. They want to unload it. Many made the argument during the financial crisis that this could be profitable for the government, and that unfortunately was not true. It was not profitable what they were doing, purchasing everything that they could. Definitely not profitable. There's more debt now than there was before. There's much more debt. There's more national debt. There's more state debt. There's more corporate debt. Every type of debt has gotten worse. There was no profit to be made. The same thing is happening now. The same mistakes, in fact. Look at crude oil dipping below $29 a barrel. How low can it go? Not much to say for this today. I would just explain the fact that crude inventories are suggesting that Iran coming back online is the reason why this declined. Everyone knew this was going to happen. Didn't take a crystal ball. I talked about it yesterday that this would happen. This right here happens to be energy companies. The first one on the list, for example, Chevron Corporation. This is hundreds of billions of dollars in debt. These companies are heavily indebted right now, and this isn't going to stop anytime soon. I can see it getting worse and worse as the days go on. Something to keep an eye on. Right here we have the Japanese stock markets. Yes, there is an uptrend here. Well, when you print all kinds of money, trillions of yen, you can get the stock market to go up, but you do encounter issues here, and this is going back several months. So it did spike upward and now has been going down dramatically, showing you that these declines here are very serious. The stock market has come down significantly, a few thousand points, in fact, over the past few months. The Japanese stock market unable to keep up. No matter how much money is being printed, no matter how many shares of the stock market they buy directly and indirectly, the stock market is still declining. Japanese stocks fall as benchmark indexes trade near a bear market. I would have to say that they have been in a bear market for multi-decades right here, but let's just ignore all the facts. Global equity gauge drops to lowest level since 2013. I have to disagree and say that it is, much worse than that. It's a lot further. Hey, if you want to acknowledge 2013 at least, well, that's better than nothing. And once again, they're saying that they're close to a bear market. I have to disagree and say that they are definitely in a bear market, never left the bear market. But the statistics that they use are often skewed, and even when they are bad, they like to present them as being somehow good or beneficial. It's all a bunch of propaganda. That's what I'm here to do, dissect it and really just show you how to do this on your own, because you need to be able to understand that information for yourself, to learn how to read not just mainstream media articles, but look at the government data and really get deeper into that and understand, hey, wait a minute, this isn't real. We need to know what's real and what's not. If you found this video informative, please give me a thumbs up. And also, if you've been watching the videos on here, you definitely want to subscribe. We are nearing now 30,000 subscribers here on the channel. Hopefully within the next day or two, we can be at that number. Perhaps by the time you're watching this video, we're at that number, and I'm not ready to celebrate yet, but let's just say that that is a good, positive note for liberty. 30,000 people are connected with their liberty minds in this case. If you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you head over to Amazon, they have this look inside feature. If you flip through the book over there, see if you like it. Take care.